What if I told you what we're seeing in this current bull market is no different to every other bull market we've seen in history? It is designed to get most people offside at the wrong times and get everyone into the market also at the wrong times. This time we're seeing extreme volatility. We've seen extreme crashes on things like copper. We've seen other commodities go down over the last couple of weeks. And we're seeing more flip-flopping, forward-flopping, taco type of trades from the White House. They are releasing new rates on 92 countries again. Things like increasing tariffs that they've already talked about, agreed on. In the case here, you can see it with Canada, plus a full list of more tariffs. Now, the same thing happens in every single cycle, but there's always a different story as to why it's happening. Our job as traders or longer term investors is to try and remain on the same side of the market for as long as possible. If you're making profits through this run, then you're doing better than the majority of people and traders and investors and hedge funds. So don't be too concerned if your neighbor is making hundreds of a percent. The majority of people will eventually give it all back. What I think is happening is this final call phase. We're basically hitting the local top in many markets, like we've just seen across Bitcoin, stock markets, and in some cases, the commodities as well. That's what I want to look at in today's video, as it all seems to be lining up with the correction that we've been discussing now for several months here on the channel. Like, subscribe if you are new here. Let's dive straight in. I'm going to start with the total crypto market cap, as it is, I think, a pretty good indication of where the market sits overall if we're talking about Bitcoin and cryptos, before we have a look at traditional markets to give us an overall picture of the cycles. Now, if I move my little head here, you can see the lows were basically where the early buys, the accumulation took place. It's the most difficult in markets because it's usually where the most fear is. But you can almost guarantee yourself identifying these levels because of how low the volatility is. And so you often hear me talk about high volatility. High volatility is represented by larger swings in the market. It's not necessarily represented by larger percentages, because you're often going to get, from a mathematical point of view, larger percentage moves at lows. You've got a 15K low here and a 30K top here in the case of Bitcoin, and that represents a 100% move. So if it corrects 5-10 grand, it's still going to be quite a decent move. However, at the highs, we have very big swings in price, and they typically get pretty significant headlines. The market's gone from, in the case of the total crypto market cap, roughly 2 trillion, ran up to 3.7 trillion, all the way back down to 2.2 trillion, and now it looks like we're consolidating, ready to move up into 4 trillion for the first time. Once the accumulation takes place, the confirmation of this being accumulation rather than distribution is the breakout. So we've got the breakout buys here. These ones here, you can often wait for the accumulation to be over. You're not going to get the lows, but also you're not going to keep getting hammered by dipping your toes into the water and just watching the market over a long period of time continue to consolidate. Horses for courses, essentially. So you got the confirmation. Then I've just labeled these as lucky retail, a final low as well, which is what we saw early this year with the tariff dump. Late retail, potentially an early distribution. We have seen some whales sell out during this period, a little at this period as well. And I think this could be one of those final calls because we've got the breakout, what looks to be like a retest and consolidation, which could take some time, as I'll show in just a moment. And then we lead up into that final stage, something like a distribution phase. And I think that will be represented, like all Wyckoff patterns, by some sort of larger movements. And that's where we'll probably start hearing from friends, family, and more of those top buyers or extremely late buyers. Now, although bull markets produce some crazy headlines, huge price targets, they also produce relatively strong trends, nice simple trends to be following. And if you're understanding how to follow those trends, you can make some significant coin, as our premium members have been making. This has been one of the largest trades we have seen, 400,000 US dollars in a month, based on the strategies that we teach in TIA Premium. And so if you're just new into the market, check out TIA Premium, learn how to trade or long-term invest so you can remain with the cycle throughout the years to come. You can continue to build on your nest egg. Along with that, you'll receive our weekly reports and get free access to our community Discord, where you can check out all of the other results from our traders. Link to this is in the top of the video description. As for Bitcoin, we saw retail arrive on the 10th and the 11th, as I've been covering here on the channel. They can be right for a shorter period of time, and generally they do have to be right for a short period of time so that it drags more people into the market. And that's basically what happened here. You saw the market break out of 116, ran up to 123, quickly pulled back, and the next day was down. Basically giving us an early sign, not that it could be confirmed until later in the move, but it's telling us that maybe the steam is running out. And it takes time because, of course, we need to see some distribution. That played out, and then we got the test of the retail arriving bar. Basically, the price is where a lot of retail started to get into the market. I don't think the show's over, as I'll show in just a sec, but that's a look at where we currently sit for BTC. It's come back down, hit 114. And even if this is the case where we put in a low, I'll be careful of the next buy the dip opportunities, as I'll show with the S&P 500 in just a sec. The S&P 500 did hit a new all-time high yesterday, pulled back quite a lot, and closed lower than everything over the last week. So a significant move here, which is lining up with some of the cycles that we've discussed for months on the channel. So there's another sign to ensure you subscribe. Watching our 5-year cycle, 20-year cycle, 10-year cycles, a lot of these cycles have been running up pretty smoothly together, and they're also showing that there could be a pullback into late Q3, potentially early Q4 before things start to move on again. Now, with the pullbacks come by the dippers, and in the last cycle, well, in the last move from April, we did see a lot of buy the dippers. April 5th, retail investors buy stocks at largest level in 10 years. So that was just before the tariff dump, where things basically went down another 10%. Now there was billions and billions of dollars, 4.7 billion, getting bought up before we saw the next correction happen for the S&P 500. So here is the second, here is the 31st. Lots of retail buying up this low. Then the market came crashing down, basically wiping out that. So I don't think there's going to be a significant collapse like this. We've seen tariffs now multiple times with Trump flip-flopping and turning the tables, already discussing them and then imposing them again. And I think the market is getting a little used to this. However, it doesn't mean that it's not going to have any sort of effect. It just looks like, and what has happened is that the effect is getting a little less. Speaking of the effect and the buy the dippers, should this dip be bought up quite heavily by retail, we might be in for another correction. Now, as I said, I don't know if it's going to be this sort of correction because of the scare is not the same sort of thing. We've seen tariffs, so I don't think it's going to be able to scare the market again. But if we take a look at our cycles, our 20-year cycle is moving down into September. But you can see here it drops off into August. We have another rally, potentially the buy the dippers, and I've given a reason why maybe that occurs. And then it takes some time to wash those traders out again. So we'll continue to follow up with these cycles through the next couple of videos. The S&P 500 on the 10-year also shows a correction into August, September, with a slightly higher low here on the closing price. Remember, the low could be lower, but the closing, this is the line for the closing price. And then even here, you've got to move up in October, holding out for November, slightly pulling back in December. So I've looked at the 5-year, the 10-year, the 20-year, most of them looking pretty okay once we can get through this period of Q3 into early Q4. Meanwhile, the NASDAQ's also had a pullback, so we may have a local top here on the NASDAQ. And you can see from the 5-year cycle, even for the NASDAQ, there is some consolidation before it's getting ready to move higher. That's for August and then September. So it's in a slightly stronger position on the 5-year. Nonetheless, there is still some consolidation here, and it doesn't necessarily mean that it must follow this. So far, so good, but we've got to be open to the fact that it could change. But what's not changing is the top of the cycle. We are definitely here, definitely in the winner's curse phase, and we've seen two other pieces of the criteria being met. The US dollar has continued to slump. In the short term, we are getting a short squeeze, because like we looked at yesterday with the prices getting moving up higher, we're getting close to the 100-point mark. There was a lot of short traffic on the dollar, a lot of bad news, yet the price wasn't falling as much as it has done. in the first quarter of the year down into this April low. So it just looks like it's a bit more time here as it comes back to test the previous support, potentially becoming that resistance around 100, 101. Otherwise, we've got our 50% there around 103. All of this still doesn't change the fact that it's been met for the 18-year cycle. So things are still playing out to a T. The Home Builders ETF also on its way to a lower high or potential lower high. As we can see that it's hit the 105. Day after day, it has fallen from this point, from the 50% level. And the reason that this is so important is it can be a canary in the coal mine, looking at when this thing tops, how much longer does the rest of the market have to go? In the last cycle, it topped around mid-2005, put in a lower high in early 2007, and you can see just here, S&P 500 top. That's when the stock market topped in October 2007, and the home builders were well and truly down 56%. 56% from the current top would mean the home builders would be somewhere down about 60 points here. So quite a long way from this high. Potentially, still some more time. We could still see this thing rise up. But if it is climbing to higher prices, we're watching now for the lower high to be confirmed. The 18-year cycle is based off the US real estate and economic cycle. So the US real estate prices and what the economy is doing in the US. So we get a slightly easier game here in Australia because we get to see what's going on in the US. Now, whether you follow it or not, this is essentially what I've seen happen over the last 19 years. Many don't believe this is the case, and then we have different types of cycles. I don't think that's the case, but you're welcome to believe whatever you want. In the case, if you're following the 18-year cycle, we can see even for Australia that we've had another positive month. It's gone out to another very long streak of positive month over month. This time we got 0.6%. And what Michael's pointing out here is that he's looking for a 1% per month move in real estate prices to basically show us that we're really signaling somewhere near the end. We saw it in 2021 leading into that short-term peak of 2022, which we have now crossed over. Sydney, 1.2 million median value. Brisbane, 934. Melbourne, 800, depending on which data sources you're looking at. They're expensive either way, but we saw these high prices through 2021, 2022, and the monthly increases were 1% or greater. So that's what we're looking out for now, as we've already seen some of these signs that it's likely that we're going to see this peak in the next sort of 12 to 18 months. So because I think that there's going to be a land-led recession, and that could be coming in the next couple of years, I don't think that Bitcoin is going to go into some sort of super cycle and basically stay up forever because of what's going on elsewhere in the world. I think that a lot of this stuff is going to come down together, and that's why I keep following up with the real estate cycle. If we get a land-led recession, there is a ton of money out there in the world, and most of it is held in real estate. So if we start to see that come down, I don't think Bitcoin is going to be held up. People will start to sell off things that are easy to sell off in order to support their lifestyle, their properties that they potentially live in, maybe even their investments or holiday homes. Now, that's obviously my theory on what happens in the cycle, and that's how I intend to trade and invest leading into that and out of that. To me, that also means that altcoins aren't going to make it, and they're probably going to go through a multi-year bear market, even worse than what we've already seen them go through. If there is a little spike, hopefully big spike for altcoins, I don't think it's going to be long-lived. I think it'll be a short-lived spike, and at the moment we're seeing this in the charts as well. There has not been an overbalance in time and price. From yesterday's video, it's the Bitcoin dominance has actually gone up, which means altcoins have also fallen a little harder than Bitcoin. But I am hopeful, at least for the altcoin holders, that we're going to see Bitcoin dominance break this level here, which would overbalance the previous move down. That was the last time we saw alts really take off, and I think if we get that again, it's going to be a nice altcoin move to the upside for alts. Meanwhile, Bitcoin can also hold its ground. Just means that alts will go up more than BTC. As we saw Bitcoin dominance go up, altcoins get smashed. We also saw Bitcoin go down, yet the dominance remained because it didn't go down as much. But that's all down to the USDT dominance. So the stablecoin market dominance is now testing 4.4%, which is the previous support level. The other support that it found support before it rallied up into 4.4 to test that level was around this 4%. Ideally, we get the rejection here and the market heads down, breaks the 3.7, and then we can start to look for some sort of cycle top forming possibly over the coming months between 2.5 and 3.7. That's for the USDT dominance alone. If there was a break of 2.5, that would basically send things absolutely wild. I'd have to reassess what we've been discussing, but I think at the moment it seems rather unlikely that we would get a breakdown of 2.5% for USDT dominance. For the total crypto market cap, things are still holding up. This one includes the top 10 and the stable coins except BTC and ETH. So what does that look like? It's basically this chart here. XRP, BNB, Solana, Doge, Tron, Cardano, right? So then of course it includes the rest of them below those that have been doing pretty well, Sui and Hyperliquid. Those have been holding up above the critical support levels, 900 to 950, even with these last couple of days of them falling. So it's looking good in this stronger position. But as you'll see with the others chart, excluding the top 10, so excluding everything here, except for your Hype and Sui, it's not as much of a stronger position. The good news is it's holding on support. We haven't gone to the overbalance in time and price to the upside yet. Everyone getting super excited over the July period of the altcoins booming, saying it's all on, have obviously had to bite their tongues and just hold on again. If this doesn't break the lows here at 7%, then it's got a pretty good chance of moving higher, a nice entry opportunity as it breaks through the highs. And of course, the cycle could continue there, get that altcoin season pump. But what does this look like in the longer term? If I move my little head out of the way again, it's really a very, very small move so far. This tiny, tiny move here is what people were getting excited about. This is the multi-year bear market that's happened for altcoins. 9% minimum, and then you've got a ton of resistance around 9.8, 10, 10.5. So quite a large price cluster of resistance overhead. If it could do that, then you're going to see altcoins really boom, getting above all of these resistance levels. Otherwise, it's pretty much potentially another short-term party for a select few altcoins. Not my opinion, it's just what the charts say. You can't have a mega alt season unless the percentages go up. Percentages go up, it's on. Absolutely on. Altcoin season parties non-stop. You're going to hear all of the absolute mayhem, and people will hang on for 13, 17, 20% altcoin dominance. That might be where they start to get a little bit wrecked. Don't be on that side of the wreckage. Take a few profits, hang on for the ride as long as you can. And the ride with Ethereum also continues. We're at 6 weeks to the upside on the long-term chart here. You can see in the previous occasions, 6, 7, 8 weeks, as we've covered before, has been times where ETH needs to pause and consolidate the move before it's able to move higher. You can see out of the lows, 6 weeks to the upside, pause for a while. You had 1, 2, 3, 4, 5 weeks, and then it started to move again. Longer pause early in the game, accumulation was taking place, then the breakout. 8 weeks to the upside. Again, needed to pause. A little boom, came back into that zone, paused again. 7 weeks into that top, we had the top signal that we shared here on the channel, the 3-bar rule, and then the market came down. 6 weeks into this next top, wasn't able to hold those gains. Again, top signal, 3 bars, market came crashing down. I'm not trying to call exactly where it's going to go. I don't know. But when we see those signals, we just have to take some more caution. 7 weeks to the upside, we just recently saw when it hit 2,800. Took some time to cool off, consolidate the significant move. And then, like we've just seen, took off again. We're at 6 weeks, and again, ETH is slowing down. Pay attention to timeframes. It happens time and time again. The way I've explained it is basically like energy in the market, or energy if you're going for a long run. Fuel in the car. It needs to refuel. It's as simple as that. A lot of people think it can just keep going. This time's different. No, it's got more left in the tank. Maybe it does. But through this entire cycle, it's done the exact same thing over and over again. There's a short-term move. It's consolidating there for ETH. XRP, similar sort of thing. It has punched a little higher, but has needed some time to consolidate and basically come back to where retail got in. Big bars, you can see where they get in, tests, and then the consolidation. So I wouldn't be too concerned if it didn't break 260 to 280. Currently sitting at $3 here for XRP. SUI also went on a 6-week run. It happens to do less weeks, so the fact that it got to 6 weeks was slightly less of a price rally than what it previously did. Needs to hold above 290 while it consolidates before it can attempt this move again. So the cycles seem to be working out, whether it's the short term or the longer term. Still no signs that this cycle is over. I understand many people are going to try and call the top. I don't think that's a great idea. Just take the profits along the way. There's still no reason to suggest that altcoin season is on or off, which sounds a little crazy. We haven't had the breakdown, but we also haven't seen it push past those previous highs. I'm still leaning on the side of slight bullishness for the altcoin season because it's already put in one leg that's overbalanced a previous leg. So I'm still hopeful for an altcoin season. Bitcoin is still on the way up. Stock markets still on the way up. But overall, we've seen that local high come in, markets begin to fail. And I think that's the next part of the cycle is playing out, where we just get this consolidation after a nice solid move higher. Like, subscribe. I'll be back with another video soon. I think I'm stuck here on the island because there might be a tornado forming outside. So there'll be more videos from here until I get back to Australia, safe and sound. Yeah, until then, I'll catch you soon. Maybe a few videos outside for you. All right, guys. Cheers.